Hey, good morning. Let's go over today's trade plan. And just another reminder that today's video is being recorded earlier than usual, so the overnight range is still developing. But already we're seeing that directional conviction in the market that we were looking for. So, yesterday's plan, I talked about how the market was still mixed, and ideally after the FOMC announcement, we'll get some resolution on direction, and then we can continue going that way. So at this point we have that resolution on direction, and you can see that the market has already broken out of a pretty established 3-day balance, very defined over here. And at this point, given the fact that we are breaking outside of a 3-day balance, ideally we should not really see much of a pullback. And this 23.5 to 25.5 resistance zone is really the first immediate inflection point above the breakout area. Then we have some resistance at 28 to 30, and a breakout above 28 to 30 would just confirm that this market is quite strong, and from there we can continue on up and test 35.5 and 38 to 40. Really the primary upside target at this point, considering that again, we are breaking outside of this 3-day balance, is back up towards 35.5 and 38 to 40. And even then, the market doesn't necessarily have to fail at that level. It can certainly attract some sellers. We can get some level of rotation off of the resistance zones above, just because the market would be quite extended into it. But it doesn't mean that the market has to necessarily just stop right there. Eventually, after some time, maybe 1 or 2 days, I think the market can actually head higher if we can take out 28, 30, 35 half, then really the next key resistance spot is going to be up towards 47 to 49, and then 53.75 to 56 quarter. And eventually, the market could even make it all the way up there, given enough time. So at this point, the buy side is very much in control. We can see, the market is already testing 23.5 to 25.5, and again, this is a pause point. The expectation is not that the market is going to fail here. It's just that it can rest here for a bit and then continue going on up. 28 to 30 is the next inflection point, but really the main resistance area at this point is going to be up towards 35.5 and 38 to 40. And again, it's an area where the S&P could simply be exhausted short term, and then we could perhaps balance and consolidate this upside breakout. On the downside, we have short-term support, 14 quarter to 15 quarter. But again, if this market is truly strong, we should not see a deep pullback. This is a breakout outside of a 3-day balance. So, if this directional conviction is going to stay in the market, then we don't really want to see deep pullbacks. Deep pullbacks after a breakout are indicative of intraday weakness. And, if we pull back too much, then that whole breakout really starts to come into question. And at that point, you really have to consider, is this breakout going to start to fail? And, then you want to be cautious. So we're going to be using the 10 to 12 as the bull bear zone. That is the top of the previous balance and the breakout area. And if this breakout is going to stick, then the market has to hold above 10 to 12. And again, this is kind of the final spot. Ideally, we don't even come back here. Ideally, the market actually continues to hold at these higher prices and then makes its way up to, 35.5 and 38 to 40. And at this point, the buyers are back in control. So any short setups are really going to be relying on trade location, because at this point, the buy side is in control. So you'll be fading the immediate momentum and the primary direction that the market's really moving towards. So any short setups taken at this point, really the only edge they're going to have is trade location. And that's why if you are going to short the market, then it's best to be patient and get the best location possible to give yourself the best shot at allowing that trade to actually work out. Otherwise, given the level of buying that we're seeing here, we could quite easily just go through zones. So 28 to 30 is an area where we could see some selling here short term. 35.5 and 38 to 40 is another area where we can certainly get some profit taking and some pullback, and then we can start balancing and kind of consolidating this move. But overall, given that the buy side is now in control, it makes more sense to buy pullbacks into support, unless there are some major warning signs, like the advanced decline line just completely tanking off the open, the tick holding below zero. Then of course those need to be weighed and taken into account. But as long as there aren't any major warning signs, then the safe setups are going to be buying pullbacks back into support, or broken resistance, which can act as support, or a consolidation area from the overnight session where the market maybe spent some time or balanced. That can be a good pause point on the way down, and even a spot where the short-term selling stops, and then we turn around and make yet another high. And really the challenge at this point, for Thursday, is going to be that the market has already made a pretty significant portion of the move, right? Again, there is still some upside left. It doesn't mean that we have to stop here. We could quite easily go up to 35.5, but again, you've already moved from the 2010 area all the way up. Right now, you're already trading the 28 to 30, and if you already start trading close to 35.5 or 38 to 40, then the challenge is going to be to really think about how much more upside is left, and that's why the conservative idea would be to wait for some pullbacks into support, and even then, play a bit defense, because you can get multiple pullbacks after such a strong move, and then the market can consolidate and balance. But overall, this is so far a breakout outside of that 3-day balance, so buy side is in control. Focus is going to be more on long side. If there are any short setups that present themselves, then you just want to be careful that you get the best location possible, and if you can't get the right location, then it's probably best to skip that trade and wait for the next setup. So those were the main thoughts heading into Thursday. Let's see how well the buy side maintains control on Thursday, and we'll take it from there.